Learn how to make an effective IPO trade from the best trading opportunity of this month. Hi, I'm Mike Bellafiore, co-founder of SME Capital, a proprietary trading firm located in Midtown Manhattan. And I'm also the author of the trading classic, One Good Trade, and the Playbook. In this video, learn how to spot the most important technical levels in an IPO, how reading the tape can help you spot areas to add size, and how best to exit a winning position.
So this is an IPO trade on SmileDirectClub. A little bit about the company. SmileDirectClub is a teledentistry company based in Nashville, Tennessee. They operate online and have 200 retail locations in 38 states and Canada. SmileDirectClub produces 3D printed clear aligners, and they sell plans to customers for roughly $2,000 per aligner, which to my understanding is a fairly competitive price. They were founded in 2014, and they compete with traditional braces companies and clear alignment companies like Invisalign. Something negative that I found when I was doing my research on the company is that the American Association of Orthodontists has filed complaints with 36 state dental boards alleging that SmileDirectClub violates regulatory standards. So this could be a negative check in favor coming in for a short setup, but nothing that completely shifts my bias in one direction or another. SmileDirect was aiming for a valuation of roughly $9 billion with this IPO, which is about 3 times larger than their last valuation when they raised $380 million in a private round. The company had $8.5 million in losses last year. However, their sales jumped 113% in the first half of this year to $370 million, and the company does expect to close the year profitable. Some more fundamentals about the IPO itself. Just prior to the IPO, the SDC raised their IPO price to $23, which was above the initial range of $19 to $22 due to an oversubscription to the offering. However, the actual open price of the IPO is at $20.55. And so to me, not being able to hold that $23 or being able to hold outside of that range of 19 to 22 could be could signal weak demand. But again, that's just another check in favor. They were offering 58.5 million shares, and there were top underwriters behind this IPO: JP Morgan, Citigroup, BofA Merrill Lynch, and Jefferies. So that signals to me that this could be a hot IPO with good room to run.
Just some fundamentals about IPOs. Good when it's pricing above its IPO range. That's positive for the company. That means that it's oversubscribed. Opening below the 23 pricing is bad. Your first very significant support level is going to be 23. That is by far going to be the most important technical level when we open up. And then the second one is going to be 20.55, the actual opening price. But this is not good. This is not good. This is not good that we're opening up below the IPO price. That means that all the people that bought this IPO from JP Morgan, from Citigroup, from Bank of America, from Jefferies, that means all of the sales traders at JP Morgan, Citigroup, Bank of America, and Jefferies, they've all got customers who are underwater. They've just sold them a deal that is out of the money. That's not looked upon positively. Now you could say, well, maybe they should give it a little bit more time, but the way IPOs ought to work and keep customers happy so that customers go back and buy more when JP Morgan calls them and Citigroup calls them, is for these to open up and trade higher, to be above where I've actually bought the IPO. Okay, so we're below the most significant technical level.
So my plan going into this trade was to watch for buyers or sellers to create an early opening trend. Then I wanted to identify a pull-in or a level break and retest setup to develop in the direction of that opening trend. Now I only want to take this setup on the following levels: the IPO open price, the opening range, high or low, VWAP, or whole dollar levels, especially the 19, 22, and 23 levels.
So why are you looking at the opening range high or low? What's your thought process there?
A lot of times I've seen in past IPOs that when the IPO puts in an opening range low or high, and then that opening range low or high is broken, it can be retested very cleanly and provide a good setup to risk off of for a continuation with the trend.
You don't mean the range before it was actually priced. You mean the opening range for after it starts trading, correct?
Correct. The opening range is usually put in that first 5 to 10 minutes of the opening price action. Lastly, I also wanted to be aware of possible intraday reversal well after this trend develops to take profit, because a lot of times with these IPOs, I've noticed that you see new buyers or new sellers come in later in the day to get good prices, either for value buying or selling when the price is high.
Because you're a very systematic thinker, I would like for you to be saying things like, this is where I'm going to get in, but then this is where I'm going to get out. So I'd like for you to spend a little bit more time with your trading plan thinking about where you're going to get out for these particular trades. I think that's going to be important, because I don't want you to shortchange yourself if you get into a particular position that really starts to work and you cut it too early because you didn't really think through how you were going to trade it if it started working for you. And my sense from talking to you quite a bit is that you enjoy being more systematic in your thinking, and I fear that if you haven't thought about that and included that in a trading plan prior, that you're not tapping into your strengths.
Yeah, I completely agree. I think with IPOs, this was one of the first IPOs I've traded, so I wasn't sure what that intraday reversal would exactly look like. But with this position, I kind of got a sense of what that intraday reversal can look like. And to me, I think it looks like a 5 or a 10-minute bar, piercing and closing back above a whole dollar level on volume, with a lot of buyers showing on the tape, demonstrating reversal. But it kind of took me going through this trade to figure that out, and I definitely agree. In the future, I'll be looking to add more structure there.
Good, and that is a good idea for you to exit. I'd also add, and we talked about this during the day of this IPO, that a value buying area spotted can be a reason to exit. A capitulation pattern spotted can be a reason to exit. Okay, I like your exit as well, but thinking through that prior is going to get you better exits for you and for the type of trader that you are.
With the trade management, here's a chart of 1-minute bars from the open of the IPO all the way to 1:30 p.m. You can see on the open, SDC initially lifts, but it can't trade above $21. It actually finds quite a bit of sellers at $21 and quickly flushes down and puts in an opening range low of 19.30. So that opening range low of 19.30 is now a level to me to risk off of. So once we put in that low, price started pulling in, and so this is when I started looking for a pull-in setup at VWAP or at the IPO price. So once SDC pulled into the IPO price.
So did you think about shorting at 21 as well?
I didn't. I wanted to see. I wanted to give it a little bit of time to develop that opening trend.
When you get something that's opening up below the IPO price like that, and you spot resistance on the offer, on the tape, you see heaviness areas, that is the first time for you to be thinking about, on a swing trade, shorting. The fact that it's below that IPO price is very significant. It's not that it can't retrace all the way back up to the IPO price, but the very, very poor open is giving you a lot of information that we want to short pops, we want to short resistance areas, and put on some risk here.
I 100% agree. And a big theme for me in this trade was that I wasn't aggressive enough. And I think getting in at that initial $21 failure, knowing that it was opening below the IPO price and back in the IPO range, I think that was more than enough reason to enter at least a small amount of size at $21.
It is. It is 100% enough reason to enter. The technical failure below that IPO support area is enough for you to be looking for weakness and to be entering. Because really, when it's below the IPO price, it needs to go find an area where it's showing you there's going to be buying. People bought at 23. Now we got to find this next area where they're actually going to be buying from. And we don't know the answer to that yet. And the most logical thing for this stock to do is to go tell us, to speak to us, to show us where people want to buy this other than 23. That's the most likely thing to happen.
So I did not end up entering at $21. And so when it began to pull in, that's when I started looking for the short. And when we got to 20.55, which was also VWAP, there was a massive amount of selling and a very clear rejection to me with a 1 minute bar that developed a pretty large wick through 20.55. And I captured the tape in this moment, and I wanted to show it to you guys. It was pretty obvious to me what I saw as selling. And so let me expand this.
If you want to learn 3 more real-world setups that our traders use, including the simple setup that we teach all of our new traders, and the setup that turned one of our traders into a 7-figure big money earner, check out the free webinar that we're currently running. Just go ahead and click the link that should be appearing now at the top right-hand corner of your screen. That's going to open up the free registration page in a new window. Don't worry, you're not going to lose this video. So go ahead and do it now before you forget. You're going to learn more in a couple of hours from this trading workshop than from years of online education.
So we're here pulling into the 20.55 level. We haven't pulled into it just yet. And you can see as soon as we make contact, there's a large brick of sellers or bid prints that hit at 20.5. And so that's the first sign of selling to me. But those bid prints slow down, and we actually get some ask prints below 20.55, and .55 is temporarily broken. And while we do get bidding above the level, the bid can't hold above .55 for more than a few seconds or so. All the while, we're getting large prints still filling above 20.55. And so, to me, this is very bearish. And then finally, towards the end here, we start getting a lot of bid prints at 20.5, and eventually we get a large break that pushes price down all the way to 20.2. So once that final brick hit at 20.5.
So that was a really good example right there of a stock that is technically broken and shows you another level to trade off of from the tape. That was a significant level right there. That 2050, that 2055 area, that was significant. There was nice volume there. There was a nice fight there. When it gets below that area, that is, if you're not short already, an add signal on the short side. The sellers won. There was a fight. We like levels like that. When we talk about areas intraday that we can trade off based on price action, that's an example of one.
So once we had the big rejection at 20.55, we consolidated below 20.55 and eventually broke down into 19.3, that opening range low. There was some buying there, so I covered a quarter of my position to manage my risk, and I moved my stop loss once we hit 19.3 again to break even. We then consolidated. There was a little bit of buying at 19.3 and $19, but it wasn't very significant. And we eventually broke below $19. Once that happened, I moved my stop to 19.7, just above the consolidation that occurred above the opening range low. and we just consolidated. And after 1:30 p.m., I decided to switch to the 10-minute and 15-minute time frames in order to account for the noise that was occurring, I felt, due to the volume dying down. And so you can see for another hour or so, we consolidated below $19 and started coming into 18. 18 was the next place where I was willing to take profit if I saw buying, but I wanted to wait for my time frame, the 10-minute time frame bar, to close after $18 was touched. And you can see here we closed below $18, and there was not a lot of buying at $18. So after we broke 18, I just moved my stop for half of my original position above 18 at 18.2 in order for me to still remain in the position. Then price hit $17, and there was a very large buyer at 17, and you can see that the 10-minute bar touched 17 with a bottom tick and then closed above. And so to me, that was the value buying that I was looking for to close my position. And so I covered half of my original position there, and moved my stop to above that consolidation at 17.8. And shortly after, I was stopped out for the full position. Last thing I want to note, which I picked up from the DNA videos and noticed worked really well here, is that the IPO levels from day one worked very well in trading on days 2 and 3. So you can see that the $18, $19 hold dollar levels were significant, and each level held at least a couple times. And you can also see on day 2, we opened right above the close of day 1 and right below that $17 level. We quickly reclaimed it, offering an opportunity for an opening drive set up above 17 on day 2. So I thought that was very interesting. I wish I was trading STC on days 2 and 3. And been paying attention to these levels.
Yeah, look, we talked about this with all you guys when this was happening. We made this point, which is that if you're trading Apple on the same day, there are so many different price points that traders are looking at. And they're tying themselves up into a pretzel about whether they should be long or short based on if they would if they used all the different ways that you can attack with technical analysis. And there's just so many competing ideas about whether or not this is a buy or sell based on technical analysis when there's so many price points. But when there is a young stock, day 2, day 1, day 3, in an IPO, there aren't a lot of technical levels that people are looking at. There are a few. And there's not a lot of indecision about what those important technicals are. They're as clear as day. And anyone can pick them out. Okay? In the first week of your trading career, you guys can pick them out. And so that is why day 2 and day 3 levels for IPOs work so well. Because they're much easier for more people to understand. So we often talk about second day plays in stocks that are in play, and those are really, really good levels. Well, a second day play in an IPO is even better because there's more consensus as to what the important levels are. You actually have a structural edge on day 2 and day 3 when you're trading these types of stocks because the technical levels are so clean. And one of the things we're doing here is we're looking for the pockets where we really have edge. We're looking for the pockets that are worth good risk rewards. We're looking for the pockets that are in of themselves catalysts. Technicals can be a catalyst. When everybody's looking and in agreement as to what the important levels are, stocks are going to move better and cleaner and more directionally off of those levels. So that's why that works. All right, good. I really liked a lot of the way that you set this up. I would really love if the next time you do an IPO trade, if you think more systematically about how you're going to exit this trade. And I do think that for most traders, when they're in a position like this, the overall psychology needs to be let it breathe. Let it breathe. Let it breathe. I'm on the right side. I'm in at good prices. It's not a type of stock. It's not a type of trade to have two hands on the wheel making a lot of decisions. It's not the type of stock where we should be really thinking that much. It is a time to let this thing go to where it's going to go to and to exit based on our system. It will show us the exit. When I'm in something like this and it's broken and it's working, I'm just thinking about my exit rules. I'm not thinking about giving back too much profit. I'm just letting it run. I'm just letting it breathe. I'm just letting it fall to where it's going to fall to. Okay, I am not worried that it's going to reverse. That's not what I'm thinking. Unless I see a capitulation pattern. Unless I see value buying. Unless I see a lower high for a technical pattern. Unless I see a technical pattern that Armand is pointing out that makes sense to me to close. Make sense? Okay. Lots of times you're going to be trading with two hands on the wheel. This is not one of those times. It's almost like go get a cup of water. Chill. Doing less is better. You're winning. Enjoy it. Okay? And just have your rules for your exits and sit there and observe if one of those exits are appearing. This turned out to be the best trade of the month to date. It was a huge opportunity not to be missed from this IPO trade. Look, the stock opened and it did nothing but trade lower. These trades can offer tremendous trading opportunity. The key is to develop a system, an IPO trading system that works for you, and to implement it. And you will catch some of these really big movers if you are consistently implementing a trade IPO system that makes sense for you. And as we talked about, one of the traders at our firm in this stock on this day made over $100,000 in this trade. So this is a strategy worth studying, learning, and creating for yourself a solid IPO trading system that works for you. Huge opportunities, huge potential here. So now it's your turn. Are you going to try the exit technique that this S&P trader prefers and shares in this video, or the technique of taking profits into a sharp sell-off? Let us know by leaving a comment below right now.